guys, and good evening. It's Ronnie. It is July 20th, Monday, and we're starting off the week with a lot of information. This is the real start of earnings, as well as we have a change in trend of the market of the S&P 500 anyway, and some of the major indices have followed suit. So we have a lot to talk about today. I'm going to try to get to all of it, but I want to keep the video relatively reasonable in length, so that you guys can follow along. So let's start with the S&P 500. This is the weekly chart. You can see here. I know there's a lot of lines. You can see here we have crossed above. What we were talking about potentially is it was at a crossroads, right? That either it was going to um, come back down, uh, roll over at this trend line, this descending trend line here, or break above it. It broke above it last week, closed the end of the week right at this prior high, just below this prior high of 32.33. It kind of peaked above it though, which should have been the first clue there that it had the potential of going higher. And it's already started the week. You can see we had a pretty strong day today, almost up a percent in the S&P 500, and it's coming up to this 3261, 3259 rather, uh, gap, the start of this gap, which is where this the market gap to when it during the COVID crash, the beginning of the COVID crash. So this actually is not accurate. It should be 3259. We are very close to that. We are very close to that number right now, as it closed today, 3251.84. So if it crosses up into this gap, your next target would be this 3329, which is uh, a gap fill, basically, to fill in that gap that it made as a part of this COVID crash gap, I guess. So really, our sentiment changed on the market, going from short to long overall on last week, at the end of last week, and going into this week. So you'll see a lot of the positions that I held have been stopped out, or I've closed them out, the short positions, and I'm only holding um, my long commodities positions as well as precious metals right now, and looking for earnings as an opportunity to make some momentum plays. So um, let's go to the daily just so I can show this in a little more clarity on the S&P 500. You can see here today where it actually just has covered, has crossed through the prior high and is moving towards that gap. So pretty bullish in the S&P 500. The only thing that gives me pause, and I'm going to use the SPY as an example because you can see volume on it. Here is uh, the daily chart. I'm increasing the volume so you can see it a little bit better. This is the daily chart on the S&P 500 using the SPY ETF, which is a tracking ETF of the S&P 500. So here's the breakout here of that level, but you can see it's on low volume. So we're going to we're going to have to keep an eye out to see if this is going to be a true breakout or if it's going to fail and come back into this range right here. So, it's been in this range for a while, kind of chopping around. And if it does fail and comes back into this range and fails at this trend line, lower prices are going to be ahead for sure. And I think earnings is going to have a lot to do with this. So, let's just, in general, you can see the volume during this consolidation period has decreased, which usually happens during a consolidation. Let's pull up the weekly. The weekly volume, if you look here, the highest volume is on this red bar, which was a down week, a pretty heavily down week, and an actual reversal of the prior week, which was an up week. And since then, you can see the volume has been steadily declining until last week where it broke out. It upticked a little bit. And this week, starting off, obviously this is just one day. So we really need to see where the volume this week is going to be and where the stock market ends up at the end of the week. It's going to give us a better idea of the coming days and weeks ahead. So that's kind of the overall situation with the S&P 500. I'm not going to go over all the indexes. I will briefly show you the Russell 2000 because it has not broken out from what we were talking. It's got to cross back over this high right here, 1485.05. Still has not broken out. There's also the Dow Jones Industrial Average. I'll use the diamonds as a proxy there. You can see it still has not broken out. So the S&P 500, the Nas. So first it was the Nasdaq, right? Then now it's the S&P 500. So we've got the IWM, which is the Russell or the RUT, and the diamonds or the Dow Jones, which are still lagging, right? So what does that mean? And that's something that's going to be interesting. And if you think about it, the IWM or the Russell and the Dow, the Russell has a lot of the financial stocks, which have been weak. So, that could be a reason that it still hasn't caught up yet. Here's the Nasdaq, using the Qs. It did have kind of a bad week, I think, last week. Yeah, you see it had a red week last week, but it has subsequently almost recovered all of that just today. So Nasdaq pretty strong, up 2.84% today compared to the rest of the markets, which weren't as strong. So Nasdaq and tech continue to lead, which is again another reason that, like I said, I got out of my short positions in Facebook and Nvidia, and we'll talk about that in a moment. But tech continues to be really strong, um, and so really we have to kind of adjust our positions there. And it's good that we get out of it quickly so that we don't prolong losses or take small gains, which is also okay if a position starts to go against you, um, and a trend starts to change. So you can see here last week in the market, it came down to these trend lines here, still above the 20 moving average. So really, not terribly weak, but a little bit of retracement. This bearish engulfing pattern here was kind of a signal that it may not have any more upside for the moment. But today, my goodness, today it just surged. And so really interesting to see the total propping up of the tech names, the heavy hitters like Apple, Amazon, Tesla, Facebook, Nvidia, Netflix. I mean, just all roaring higher. Google. Um, so it's interesting to see how things are being propped up. Which, I mean, the Fed isn't buying stocks yet, but it certainly looks like somebody's propping up this market a little bit. So, moving on to that, just overall, just macro conditions right now. The U.S. dollar is still weak. We talked about if it strengthened, that's something we would need to look into as far as equities potentially weakening as the dollar strengthens. They're kind of inversely correlated at the moment, pretty strongly. So you can see here, U.S. dollar is breaking down. So that is one short I'm actually going to take tomorrow if it continues to get if it gets below today's low. Tomorrow I'm going to short the U.S. dollar. We have some pivots for you here. You've got the 61.8 fib on a longer term. If you look at this is actually from a longer term chart of the U.S. dollar. You can see this dashed line is where the Fibonacci levels stem from down here at the low of 2309 to the high of 2890. So we're just below that 50% retracement from that low to high. I mean, granted, it had a bit of volatility in between there, but we're still right here. Now, the next level you could look at is the 200 moving average, which is 2555, and then down to the 61.8 Fibonacci retracement down here around 2531. So looking for some continued weakness in the dollar. We're just kind of at a pivot point for this dollar right now, potentially for a longer term downturn in the dollar, um, mainly because of weakening by the Fed, and also I'm going to put it on quarterly, and also, you know, the just continuing money printing that's going on right now. So you can see here we're kind of at a high, and you see that spike high right there kind of correlates with the one back over in 2008, um, and it's coming down from there right now. So potential, I mean, there is the potential for it to come down even further. This is a messy chart. I apologize for that, but you can see it does have the potential to retrace quite a bit more down to these other pivots down here, or even down to the lows of 2308, which is the prior low. So we'll be looking for continued weakness in the dollar and opportunities to short it, as we are in a period right now of inflation. Honestly, if you think about prices of goods and services, especially goods, commodities, groceries, things like that, their prices are increasing right now. The dollar is, um, you know, being devalued. So that's kind of what's happening with the dollar right now, and at a very high level. Um, so I'll continue to be short that because I don't see the Fed anytime soon, you know, increasing interest rates or stopping their money printing. I mean, they could be pulling back on it, but I don't see, they have already said for the foreseeable future, rates are going to remain low. So that's the dollar. From a macro perspective, dollar down, we're talking about commodities and corn, wheat, things like that, prices going up. Speaking of wheat, we'll go ahead and just talk about where I did sell wheat today for a profit. I mean, I've been in wheat since down here in early July. So I did sell some for a profit here as it crossed below my stop that I identified for you guys last Thursday, I believe, 535. I'm looking to get back in it. I mean, as soon if it comes down, let's say it comes down to these moving averages right here, I'll be looking to buy some more um, of wheat. But for the moment, I wanted to lock in my profit since it hit this 200 moving average and, you know, pretty ugly chart. Like looks like more more down moves in wheat. But if you take a look at the weekly, again, we talked about this quadruple bottom almost. I called it W plus last time, but it's really just quadruple or triple or at least triple bottom here, um, and with the potential, for some continued upside. So even if it gets down, to this prior pivot here, 511, 510, something like that, and bounces, that's a great opportunity to buy some more. For now, it looks like it has a secure high and has the potential of coming down lower. All right, so that's the commodity space. I mean, you also have things like corn, kind of at the lows coming up slowly. Soybeans also curling up from the bottom from recent lows. Um, And just, overall, that also goes into our precious metals thesis that precious metals will continue to grind higher. Uh, they have done a great job over the course of the past several weeks, just, coming out of this consolidation period, this breakout here on June 22nd, the week of June 22nd, and continued breakout over that 1789 prior high, and it's maintaining itself and just grinding higher on the weekly. If you look at it and take a look at the daily, you can see it as well. Crossed over this declining trend line and has continued higher, broken out above the prior high 1789 back here, and is just, you know, kind of in this consolidation. But if you look at the weekly, you can see it really is just up and up week after week. So I'll be looking for further gains in gold. If you take a look at it, here's a just prior area of growth, acceleration of price rather, pullback, acceleration, kind of violent pullback, acceleration, pullback. I think it has an opportunity to get at least up to some of these other pivots. We talked about 1900 as my target, even up at the top of this channel. I think it can go there. Like I said, it may not be today, tomorrow, next week, next month, but it could get to that level pretty quickly, and that's what I'm meaning this year for sure. So I'm still long gold, not going anywhere with gold. Let's talk about silver, even better. Gold is up for sure, but silver, it looks even better. We talked about the breakouts in silver and where I was buying them. It has subsequently done all of the above. Um, this is the futures chart in silver. We talked about it breaking up over this consolidation. It did so. It broke up over the, we were talking about this potential breakout over the 1820 area, 1890 area. It broke out. That's where we bought it. Again, I mean, been long silver since 1330 actually in my retirement account, but from a short-term play and momentum perspective, we've talked about buying it over the 1890 area. That was its kind of prior knocks, basically prior pivot, prior highs. So it's been knocking on that door for a few months. It broke it finally on the 6th. We got into it. We got into it more as it broke over this other trend line here. And then what I was saying is as it crosses over this prior high of 1973, also an opportunity to buy some more. And I am long silver over that as well. So added some here, over the 1890 area, again over this longer term trend line, and again over this 1973 prior high. So silver is looking really bullish. I mean, we can take a look at it on a longer term time frame and see where the potential of it to go might be. So my target on silver initially is going to be this 2120 area. So that's my next target and probably where I'll sell a lot of my position. Not a lot, maybe half of the position if it gets there quickly. So if silver pushes up to 2120 pretty quickly, I anticipate that will be an area of resistance. That's from 2016, the high. And I mean, you can see though it has the potential of just pushing up, you know, pretty high in an area where gold is. I mean, in a time where gold is increasing in price, silver definitely follows gold to some extent, but is also more volatile. Um, and has the opportunity to, blow out uh, in the manner here. And also, if you look back a little further, you can see in the 80s it had the same action blowing out to like in the 40s in both cases. Not saying it's going to do the same thing again, but it has that potential. So, I mean, we've got lots of different areas we could look at. We've got the pivots identified 2020 2120, then 25, then 26 ish, and then it has this overhead supply here after you get up to 26, and that can prove very hard to get through. So again, those are my targets for silver. First target 2120, then 25 ish, then 26 ish. Those are going to be what I look for, depending on how strong the breakout is of 2120, if it does break out, or if it acts as resistance. And then if it breaks out of there, going up to $25, definitely selling a lot at $25 and leaving a little runner, maybe a quarter position, uh, to see if it can make it to 26. And then if it pushes up, we'll just keep holding it. So that's gold and silver, pretty bullish. No change there in the position. I have SLV, which is the ETF for silver, and GLD, which is the ETF for gold. Those are where my positions lie. And you can see gold also, we've got some targets here, but you can see them pretty clearly. Let's see if the futures look like this. I don't know if they will, but we can try. Yeah. So you have all the targets that I talked about, but you can see we're just breaking up and over this the prior high. Giant cup pattern. We got 1917, 30 as a target, but 1923.70 is the all-time high here, which could of course be the final level of resistance, where it can pull back a little bit from there and continue higher. I mean, this is seriously a cup and handle, or even a potentially forming head and shoulders, reverse head and shoulders pattern, with this being one shoulder, this being the reverse head. And then if it continues and does that same pattern again, I mean, what a strong pattern for a breakout. So not going anywhere with gold and silver, especially when the dollar is still weak. And then let's finally talk a little bit about earnings. Um, and that's kind of the macro picture, by the way. We do have consumer confidence, by the way. Just have to mention at a pretty um, pretty low level. Down, I think it's 73 right now. It was, for comparison, it was 98 in July of last year. So consumer confidence is down, and the estimates, the Michigan sentiment estimates for September are even lower at 66. So I don't see how it can go higher with all of this COVID stuff rearing its head. You can see there's, even though the Northeast is cooling down, the South, the West, ramping up actually in some of the COVID um, cases. I mean, Florida, Texas, Georgia, Alabama, California, even, you know, ramping up quite a bit in the case numbers. And we have, civil unrest still happening in the Northwest and some other states. Um, a lot going on right now uh, for the stock market to be at all-time highs in some cases. So we'll be watching and seeing how things progress. Also, an election year. I mean, very, very, very much so. You know, lots of black swan event potentials and potentials to move the market going into the latter part of this year. So let's start with earnings because that is definitely going to be the next mover. Um, so oh, I will say first, I am stopped out. I'll go ahead and show you. I am stopped out of Facebook and Nvidia. You can see I had my stop here. Got out today towards the end of the day as it was pushing up. Nvidia, same thing. Huge move today. Crazy. Got over the that trend line again, and that's where I got out of the position. I had it for a loss in Nvidia because I never did get out of any Nvidia that day that I got out of Facebook on that uh, flush lower. I did get out of a lot of Facebook down here, so I am still profitable in Facebook. Nvidia, I did have a loss. I just wanted to make sure to go over both of those with you quickly. Um, and then let's go into earnings. All right, so I will say Netflix that we talked about last week. I did not get into any position in Netflix. After earnings, you can see the big flush down, and it came back up to this 490 level. And I was saying that if it could hold this 490 level, we could potentially look for lower prices. It did that in the pre-market. It actually pushed above it, which is a bad sign, and actually pulled back a little bit, but then pushed back above it as it was close to the time for the market to open. And even though it did make lower highs, and kind of just consolidated all day, so there was really no trade in Netflix at all uh, you know, on earnings. Just a big chop fest there. Never did even cross down too much below this trend line, even for the intraday trend line. And you can see then today it actually pushed a lot higher, held the 20 moving average and the low for the day of earnings, and double bottomed actually today. So honestly, it could be a long over tomorrow, over today's high tomorrow. Um, Netflix double bottomed from Friday to today, and actually double topped today too. I think that the high for today was the same high as Friday. So really, honestly, if it gets above, the high today, it could potentially be a long tomorrow over today's high. Now that I'm looking at it, let's readjust this. So you see here a lot of choppy action, but I mean the volume was pretty high on its earnings day. Today it was a little lower, but it did hold that 20 moving average and double bottom right there. I mean, I might look at this for a long on tomorrow rather off the open, just to, off of a 1 or 5 minute high. If it crosses above this 50450 area, maybe look to get long a little bit of Netflix, depending on if it's able to do that. And you could use, this is a little challenging. You could use this as your target, which could maybe be about four. It might be just $4 or so. Actually, it may not even. It would have to cross back above, yeah, this trend line. And then if it crosses above that trend line, your next target could be this prior high here. Or even if you want to be safe, you can use these bars, the bodies of these bars as a target, um, which is quite a bit higher, about 514. But I would probably be just looking at intraday timing for this. So that means, if it crosses over the first 1 minute or 5 minute high. Um, let's just show you an example of this on the chart for today. All right. This is kind of spiky, but let's ignore the spike. Let's assume it started right here on this hammer. So as it got above that, you would buy the position, right, above the first 5 minute high, for example. Or even if you use this, let's use it. If you buy the stock above the first 5 minute high right here, um, and you utilize that bar as a stop, like where you bought it over, the bottom of that bar would be your stop. So you have this 487 as your stop. You would be buying it right here at 495. You can use intraday, um, you know, moving averages and things like that to see about selling it, right? So you could buy it up here. It's kind of extended quite a bit, came back down, extended quite a bit. You could use this topping tail right here as your signal to sell. So this is an intraday kind of technical analysis, um, just for trading intraday. So that could be your way of trading the stock. And that's how I'm going to look at it for tomorrow. I'm not going to look at it for a long-term trade. I will look at Netflix tomorrow. Just saw that, and it looks interesting. All right, so going over earnings for this week. So we had IBM today, actually. So I'll go ahead and show you IBM. IBM's up quite a bit in the after hours. It's almost up to this pivot right here around 135.80. It got up to 135.23, and that's pretty close to the prior high, and it pulled back quite a bit, all the way down to 130, and is just kind of stable right there. So you have a couple of things you can look at with IBM on the daily chart, okay, for potential trade ideas on IBM. So if it comes back down to this 129, if it can stay above 129.80, right, we would probably be looking for it to come back up to this high of 135.23 and potentially even 135.80. If it gets back up to 135.80 in the pre-market, I will look for either a breakout or a retracement. So if it's able to break out above, because the 200 moving average is 200-day moving average is also right here at 129.18. So it's already above that. So it's gapping up about right here right now. So it's gapping up right here. So we'll be looking for either it to continue back up to this 135.80 level. That would be the target, right? Off the open, first 1 minute or 5 minute bar, buy that, and then look for a potential move up to the prior high of around, I'd probably use this 134.62 as a potential area to sell, because this is kind of excess right here. So I'd probably be setting that 130. Let me just make a line there, dashed line as a target right there. And if it breaks above that line and continues, you have this this break. If it breaks out here, you've got a couple of pivots you can look at. This gap fill right here, it's actually a little bit misplaced. So I'm going to change it. It should be right here. 139.62 would be your next target. Then you have this longer term trend line from 2008, complex trend line from 2008. It should actually be purple, but we'll just use it for now. It's from 2008. So that will be my next target. And then, we've got some pivots up there, but I don't think it's going to get that high. I think it might do the same thing, come up to this 135.80 level, and either break out for a little bit of a breakout here up to this 139 area, or pull back. So that's going to be my target. Buying IBM over the 1 minute if it's continuing to remain in this area, and then if it drops and is weak, you just look for the gap fill, right? So, or fill up to this 129.80 pivot. So if it gets weaker, if it's kind of like staying around here, around 130, 131, and in the morning it breaks down below this, this kind of after hours pullback low right here, I would look for a continued pullback to this 129.80 pivot, and then potentially to the 200, then potentially to the gap fill. I don't think IBM is going to be weak tomorrow, but that's Those are the two scenarios because anything can happen. It can be downgraded in the morning. Any kind of news can come out. We don't know. So that's kind of where we're looking at for what we're looking at for IBM potential play tomorrow. Tomorrow you also have Coke pre-market. Coca-Cola. It's been pretty weak. Restaurants aren't open. I would anticipate a weak earnings report there. So I'm just letting you know for tomorrow what to look at for earnings. I don't know. I mean, you have um, potential for it to break down. It would be at that 43 level. I mean, it could go all the way down to 36.27. But I'm not going to make any kind of decisions until I see what happens tomorrow. But Coke has been weak. Restaurants aren't really like open, so they haven't been open too much. So I'm sure that their earnings are going to be lower. Nobody's providing very much guidance, but there you go. Snap is also coming out after hours tomorrow. Snap has been such a strong stock. Um, if I anticipate its earnings will be good, but you never know what the stock is going to do. It could be a sell on the news type of event. You've got some pivots here. 2676 is the high for this year. If it gets, it could push up above that level and break out, and then, you'd be looking at 2944 as a potential target. If it breaks down for some reason, you have this purple complex trend line as a potential target, or 2120, 50 moving average, 200 moving average. You've got all kinds of stuff here. So we'll be looking at Snap tomorrow after hours. I'll go ahead and put another video out tomorrow about the earnings that come out. United Airlines is also coming out tomorrow. Airlines have been super weak, so lots of potential there. Also, Wednesday we have Chipotle Mexican Grill. Chipotle has been insanely strong. Um, looking for some potential continued strength in Chipotle, but it made a huge move today also. Also, we have Tesla, notable earnings on Wednesday. Tesla, look at the move in Tesla today. I mean, unbelievable. And I don't know. I mean, they had this huge shopping tail here, but today it's been continually stronger. Let's see if it can break out. I don't know. I mean, they have price targets in the 3,000s in Tesla. So, and it said, I think they had some news today that they had some orders, um, success with some the orders coming out. Let's see. Oh my goodness, I think it actually had stronger stronger than expected orders or something like that. I want to say maybe it was over the weekend. I'm not sure. I heard that they were ahead of schedule or something of that nature with their orders. So that's Tesla, and then finally Microsoft. Microsoft is a huge tech name, also a big contributor to the Nasdaq. Again, has been super strong into with this COVID. It's just all-time highs, all-time highs. Um, Very strong today. It had come down and pulled back along with the rest of tech, but it's also reversed today quite a bit, up 4.3%. So these are the stocks to watch for this next coming days: Coke, Snap, United Airlines, Chipotle, Tesla, Microsoft. That's just Tuesday and Wednesday. There's more Thursday and Friday, and we'll go into those in future videos. I've already gone over the 30-minute mark that I promised myself I would stick to. So I'm going to go ahead and end our video for today. Please remember to subscribe if you want to be notified when I put out a new video, and I appreciate you guys tuning in. If you have any questions or want me to look at a stock, please add a comment. I'm happy to do so. I do look at your comments and would love to help in any way I can if you have a stock that you're thinking about or a potential question about a trade. Happy to do so anytime. Just add it in the comments below. Thanks for tuning in. Happy trading, everybody. Have a great night.